The rich and powerful don't move markets in public. They operate from the shadows. While 90% of retail traders are glued to their screens, sweating over every single tick like it's a casino, smart money has already taken their profit and walked away. In the next few minutes, I will show you exactly how institutions trap retail traders and the specific chart patterns they leave behind when they do it. Everything in markets comes down to supply and demand. Nothing else matters. Let me prove it. Imagine an apple market. If I'm the only seller, I control the price. If you want an apple, you pay my price. But if 10 other sellers show up, I lose control. I have to discount, negotiate, and to undercut. This is basic economics. But financial markets aren't apple stands. Stocks and cryptos don't rot. They can be bought and sold forever. And this is where the trap is set. For smart money to profit, they don't just need to sell high, they need to buy big lower. But to buy massive positions at the bottom without spiking price, they need you to sell. They need supply. Now, who is foolish enough to sell at the bottom and buy at the top? The answer is almost everyone. Why? Because human psychology is flawed. We are hardwired to chase value. Nothing looks more valuable than a green candle skyrocketing to the moon. At market highs, smart money creates narratives. They feed you news about innovation and future targets. While one hand creates the hype, the other one is dumping their bags onto you. Eventually, retail runs out of money. If the big buying pressure dries up, the price rolls over. And this is the second half of the trap. When price hits the bottom, smart money needs liquidity to re-enter. So they switch the narrative. Fear replaces greed. They need you to panic sell your loss so they can scoop up your asset at a discount. And now hold on to your seat. In crypto especially, many assets are not even scarce or capped naturally. They are created out of thin air, so it costs them $0 to print more supply. They control the issuance, they control the distribution, and they control the news you read on Twitter. While you are reacting to the headlines, they shape the environment, but they always leave footprints. So let's look at the charts and find them. Let's look at Ethereum here. Look down here. This is clear and obvious demand, but notice how messy price action is? That is intentional. Retail traders get hunted here. Why? Because everyone is obsessed with going long in crypto, so they make it painful. They create narratives that crypto is dead, fear and panic are everywhere. But while you are scared to buy, smart money is quietly accumulating positions right here. Now look up here. This is supply. Notice how clean the rejections are? Every time price touches this level, it gets slammed down. This is institutions selling together. But what is retail sentiment up here? It's euphoria and moon soon. Institutions need buyers to sell to. And they found millions right here and here and here again. They feed you bullish news, sell into your greed, and once they're empty, the price collapses. The cycle resets, and if you don't spot it, you become the exit liquidity. But here's the good news. Whales are too big to hide. When you move millions of dollars, you inevitably leave footprints. And if you know how to read a candlestick chart, those footprints are bright neon signs. Let's stay on Ethereum and keep the weekly time frame. Look at this formation. You see the massive wick to the downside? Now look at the volume spike below it. This is what we call bullish absorption. Why did this happen? Smart money pushed price below this major low to trigger panic. Retail traders saw the drop, feared a break of structure, and panic sold. But look where the candle closed. That long wick tells the real story. It shows smart money was sitting right there, absorbing all the panic sells and triggering your stop losses specifically to fill their buy orders. This is exactly where smart money entered. And as you can see, it worked perfectly. Now let's see how we could have used those footprints to enter a trade right at the pivot point. So we have the weekly close. We have absorption into a major high time frame demand zone, and the signal is bright as daylight. You actually had a full week to buy down here. The trade setup is simple. Entry into the demand zone, stop loss below the low, target the supply at the range high. You don't need to snipe the perfect bottom. Even if you bought a bit late, you're still in the discount zone. But here's the mistake most make. Most traders wait, they're scared, they're fearful, they wait until the pump starts, and then they FOMO in here. From now on, that stops for you. While they are panic buying the pump, you and the smart money are already scaling out. Here's the golden rule for taking profits. The first target is always the range high, and only if it's broken you can consider higher targets. Look at this chart again. We entered at a bigger range capped by all-time high. But did we ever close a candle above it? No. The monthly candle told the real story. Smart money used that hype to offload their bags on retail, and once their bags were empty, the flow fell out. All of this isn't random, it's calculated by the size of the target. The bigger the asset, the bigger the manipulation needs to be. For the S&P 500 or gold, they can't just spoof an order. They need massive liquidity. So they use macro narratives, wars, elections, inflation data. They use the real world to scare you out of your positions. But crypto was built as the perfect money extraction machine. No regulation, wash trading, monopolized liquidity. It's the Wild West and you're walking into a saloon of card counters. For established markets, manipulation is expensive and risky. In crypto, it's just another Tuesday. Since they don't need regulatory approval, they just need your attention. They don't always use CNBC, they use algorithms on social media platforms. They hype the project so you buy the liquidity they are selling. Podcasts, roadmaps, community, it's all designed to manufacture content. And then there's the bottom of the food chain, the lowest form of bait. Signal groups and insider chats. These aren't helping you to front-run the market, they are the market. By the time you read the alert, the admins or higher tier members have already bought. You aren't the shark, you are the exit liquidity. So, how do we spot the trap before it snaps? We look for patterns that cannot be faked. Now you have the map, you understand that news is a tool, the narrative is a trap, and the charts are the footprints. But spotting the game is only one step. Winning it, that requires a system. That is what this channel is for. Consider the series your roadmap through the minefield. I will give you the tools to apply leverage without blowing up, to refine your entries, and most importantly, to master the hardest skill of all, waiting. Because here's the final secret. The market isn't random. It's a highly efficient mechanism for transferring wealth from the impatient to the patient. If you want to see me trade these setups live, make sure you're subscribed. And if you're ready to stop being the dump money and understand market structure properly, make sure to check out these videos next. See you on the charts.